Hello, everybody, and welcome to the Plus Three Futures and Commodities Show. This is our midweek podcast. We are recording after the close, March 11th on Tuesday. And my name's Ben Maldonado. As always, I'm here with my partner, Barry Hederachi. Barry, how we doing?
Doing good, doing good.
Does it feel like it's Friday already with all the action we've
Oh,
had?
yeah. Well, last 2 days are enough for a whole week.
Yeah,
A
it's
normal week, right?
absolutely. So today on today's show, we're just covering a couple things. We want to update you on the markets, update you on the important levels, and sort of tide you over until we do the full monthly review on the weekend show, which will be recording on Friday afternoon. So without any further delays, let's go to the S&P 500, which came down to support, shockingly, right?
Yes, the cash chart. Well, and that support, the key thing to look here is it's 240 degrees up from the low back
Mhm.
in September and the low that we're working off of. And I had a 90-degree on here earlier, and that's how we kind of found got the highs to come in and all of that. But every now and then it's good to check to see what other squares are doing. So
Yeah.
So this is what we were looking at earlier. And you can see at the 50% level, we basically got it, right?
And it looks a little ominous for the getting stuck below that, what is that?
57.50,
270, 270. Yeah.
Yeah. So so starting from last Friday, I'm assuming you guys are all caught the Friday weekend show.
Hmm.
So picking up from there, we were basically looking for some kind of a counter trend if the lows held, which was 56.73 held, then we could look for some kind of, we were basically looking for where it's going to stall. And we talked about if 56.73 goes, then we had to wait to find where the next support level is. And so today, just so happens we came down to the 240-degree level, which is right around 55.16 is the exact number. In a little bit, we had a little bit of air above that.
Hmm.
Came down to 55.16. And there's no telling. I mean, we could bounce around here a little bit. That's okay. But that's the key level. Now, once if we sort of get through that, then we really open up a lot. And I'm not saying we won't open that up. I'm just saying I'm not sure if we're all going to do it all at once. you know,
True. Right.
versus to savor it over, maybe a few months or something. So now it's a matter of we can do it all at once, or we're going to sort of slow walk this thing, into the woods. So far, it was all pretty well, I would say predictable in the sense that it was a clean downtrend. There's not a whole lot of chop going on as far as the daily bars go. It was
No.
kind of easy to figure out, right? We had lower lows, lower highs. Everything's pretty okay. Not that difficult. All right. Now, what I wanted to cover today was to see, okay, so it seems like we came down hard. Now, yesterday's low also rang in on a few levels. So I wanted to see if today was anything worth noticing, or if it was just another day, and tomorrow we continue to slide. Now, now that you guys know the level, watch the cash 55.16 level, because if we slide below that, and I'm telling you, we have a lot more to go, probably down to the 53.15 level ultimately. I know that we have some support around 54 and a half. We have some levels, but this one looks, it's going to look ominous if we take out 55.16. So watch that level.
Right.
If the level is hold and the lows are held, I think we can look for a bounce, but now we have to watch the old support level becomes a resistance. So watch and look how far apart they are, right? So watch 56.73. This is basis the cash on the daily chart, right? So 56.73 is one level and 57.50 is another level. So watch those two levels. And of course, we have 58.48 up above, which is sort of a major level. But getting stalling below these levels or at these levels would indicate the inherent weakness. So just keep an eye on that. Look at it in those terms. If we stall here, start reversing, and your lower time frames are reversing, you got to take those setups, right? Because
Absolutely.
because we're moving and grooving now.
Hmm.
So, all right. One other thing I wanted to look at. This chart's been really helpful, which is the front month. So we came down to support, and this is 45 degrees from the low back in back in August, kind of where I thought all this got started, because that's we
Hmm.
squared out right at the high, 90 days out. And from there, we're roughly 90 degrees down. So this is a pretty good level for support. And this angle is an important angle. So let's see what happens. I think here we managed to sort of eke above the lows and, sort of get above the 45, but I think we really need to hold about this level. Holding about this level would give us some indication of strength. So I would say 55.79 is a level you want to watch here, the futures chart. If we can sort of settle above it for a day, or just settle above it, period, then we can at least go up and challenge the 50% level, which ends up becoming about 57, 57. So
Hmm.
I like these numbers. So yeah, I would, that's the major resistance. So what do we talk about? So if this is support, that's resistance. What can happen in between? Well, I think any kind of a reversal that happens below 57 is just really weak. It's an indication of weakness. And if we can get up to at least 57, we can see what happens. Even there, if we can't really get above that, it's weakness. I'm not
Hmm.
expecting it to sort of, rocket above it and snap above it and hold just like that in the next couple of days. Obviously, we're going to probably do a little consolidation between here and there, just like we had to do up here. This level in a sort of universal sense, this zone sort of causes a lot of consolidation to happen. So let's see if it's going to continue. If we get below this level, then I think it's going to get a little slippery, just like we saw in the cash level. So here, I would say 55.75. We can write that down as support. And that's the bracket, right? If we get below that, it could get ugly, because we really haven't seen a panic. This is all just kind of selling as far as I'm concerned. Panic we haven't seen, but so if we get a panic, it'll probably be below 55.75. You know what I mean?
Hmm.
Um, and so far it's okay. It's okay in the sense that it's enough for us to get a bounce, because we did 90. We saw support held in the cash chart, and we have support here. So there's enough evidence to think of some kind of a balance might be in the works.
Hmm.
So here, this is a continuation chart. A couple of numbers we had on the board would be 56.82. You guys can see 56.751. So these are numbers we were watching to be resistance. And Ben, like you mentioned earlier today, we got a hell of a lot of overhead to deal with
Yeah.
at this point. But that's why I kept saying, like, we better not break that, because if we break that, then we go.
Yep.
And if we go clawing your way back is not that easy.
No, it's going to be tough.
So this zone, actually, where I have the zone marked out, back last year, we're back
Hmm.
in the same play. If we get stuck under that, I think not even stuck under that. If we can't settle above it, I think we can look for continued weakness until some solid levels are hit. So the numbers we talked about are the numbers you can, it's the reference numbers that I think that would work fairly well. All right, let me see what else I have here. So here's the Russell 2000. This is a weekly chart. And I remember showing you guys this false break when it happened. Do you remember that? It was like a
Yes, I
false
do.
weekly. And we said, hey, this is a false break. We can't really stay on top of this. This is not good. Sure enough. And that was back at what? 2400. Now we're back at roughly 2000, right? So 400 points ago. And the reason I want to show you guys this is if you go back and check that chart, we had these levels already marked out. We had the 2005, 2036, and we talked about that being a bracket for support. And I'm pretty sure we mentioned, if we break, we're going to come down here. And the reason this is good is we have some structural support as well as geometric support.
Hmm.
And well, sure enough, we came down and hit that perfectly. So far, what do we have? We have the S&P, we got the futures, we got the cash, we got the Russell. They're all sort of tapping on these levels. So that's part of what I wanted to share,
I think
because
NQs are in the same boat, which I'll
okay.
show.
So when you get there, yeah, we can take
Yeah.
a look at that. And the other one, the missing element would be the Dow.
Hmm.
So again, if you guys can remember the levels, We had this 41,348, and I think I mentioned if we break the 216, if we slip that, then we have 41,350.
Hmm.
Well, sure enough, we came there, and it just happens to be the quarter of the square. Also, we came there and well held for now. So, but the point here is not about calling a low. It's about knowing where the resistance is now,
That's exactly
because
right.
you know. So for the Dow, it's 42,575. I think it's a fair number to look at. Go ahead, Ben. You're going to say something.
I was going to say it's all about the counter trends and knowing where they're likely to find problems and potentially fail.
Yeah, it's all about the counter trend. So let's see how that, and that's the point of this. What I wanted to focus on today was really not about, where is the low going to come in? Honestly, we don't really care. It'll come in
Right.
somewhere. When it does, great. But the point is, there's a larger trend that's working, like the weekly charts. We ought to probably look at those because of the larger move. You want to keep an eye on the bigger trend, and obviously you can trade these short ones, not a problem. I mean, we got the fuse line came in very low today. We were market tip to the long side right after we hit the support at 55.33 this is a 30-minute chart, futures
Hmm.
chart. And you can see we've been tracking this thing all the way down. It's worked really well because markets really hadn't been able to hold above these key levels. And today we really didn't hold 55.79. We talked about this Friday. And well, this is what happens when it slips, right? We tried, came back like a false break, big ABCD down, and we stalled out here. Now the key for the next few days is really, can we get above the zone that was big time support? Now, can we hold above that, or are we going to start settling, between 55.33 and 55.79?
And as
And
usual, we're trading right at 55.79 right
yeah,
now.
it just so happens. Just so
Right.
happens. Not like we don't have any other numbers on the board, right?
Right.
So that's the key. We really want to watch that. If we can get above that somehow, I think then we have a shot at, you know, taking out 56.25. Not like these poking, but at least get on top of it, and then we can see what kind of a rally we can mount. And even here, on this 30-minute chart, we have 57.17 is kind of major up here,
Hmm.
57.60, but those are tall numbers. Let's see when we get there. But now I think this is the big number to watch for. This is sort of the balance point, and you can see the market already kind of made that into something. This is what
Hmm.
happens to good numbers when there's geometry involved, because it's not just on one side. It sort of 360, right? It's all
Hmm.
around it. So when this becomes sort of the mean reversion point, you really want to watch. And then mean reversion, I mentioned that a lot in my posts, and we talk about it too. The nice thing is the sooner you identify it, the easier to trade it. And the sooner you know when price is ready to leave that area, because we either tend to settle above it, or we will tend to settle below it, unable to get above. And that's sort of a early tip off to which direction things might be heading.
Hmm.
That makes sense? Yeah.
Absolutely.
All right. So that's it. Yeah, go ahead.
No, that's good coverage of the ES. We know the
Hmm.
levels and trade away.
Yep. So one last thing, I just wanted to touch on the weekly, only because it came and tapped the 50% of the square,
Hmm.
and it just happens to be right around, well, 55.60. So 55.60, funny enough, coming off of 59.50. I remember when we were stacked here for a month, we talked. I said, look, if we can't really hold above it, we're going to break. If we slip here, next stop is at the 50% level.
Sure.
And at the time, it sounded like, really, like,
Right.
what's going to make that happen? But you see how technicals work,
Hmm.
and one of the things to always remember is, how did we get here? And the entire time we were stuck up here, we kept talking about the bigger cycles that already expired, and it's just a matter of time the market drops. And the timing really has to do with the actual price. So that's why we watch the price levels, and when we saw that price really couldn't hold above, that's when everything started to unwind, right?
Hmm.
And so anyway, So 55, 60, like you guys can see, like we saw it in the Dow, the Russell, cash, the futures, we're pretty much, they're all on a kind of a key level. And I'm sure NASDAQ is too. So what that means is basically low of today.
It
So,
needs to hold, or else we got a lot further to go.
yeah, I think, yeah, exactly. Like I said, I don't think we've had a panic yet. And you'll see one if we take it out. I'm guessing that's what it feels like.
Hmm.
So, so yeah, watch the lows for today because, and why? Because you guys just saw the evidence, right? They're all sitting on top of all kinds of support. So I think if they go, it's probably not going to end. Well, it's going to be great if you're short. It's not going to be good for the
Yes.
bulls.
Hmm.
So, all right, I want to hit a couple of other things just to round things off. Here's the 10-year. Now, we called out this high since we started, tracking this, and we came down 90 degrees. It was squared out at the low, and now we're starting to move higher. So I think the important thing to remember with the 10-year is to make sure, if we can basically stay above 110, this is still bullish in this, square. We haven't even run 45 days yet. And that'll be March 20th. And 180 days would bring us into May, about May 20th. Price wise, I think next resistance level is around 112, almost 113. So 112.26 would be where that is, and between 110. And because of the square out here, it's really critical we hold about 110. If we don't hold about 110, well, that's it. I think 10 years is going to go lower for whatever reason. But if we can hold the 110, then the next resistant level is around 112. Yeah, almost 13, 112, 26, 27, up in that area. Okay.
Hmm.
And going up there would give us a 45-degree move. So it looks good. It looks on track. And it's, very nicely trading market.
Hmm.
Take a quick look at the yen, and I can't remember the last where we talked about it last, but anyway, what I do know is we did 90 up roughly, um, and we started trading lower. We've almost done. I'm not going to talk about these highs and lows because we called them all out. We called out this high, called out this low, and this was a zone, right? Support zone that I had put on earlier, and you can see we came down 180. That's like a no-brainer, right? From
Hmm.
here we ran up 90. So all of this is working out pretty well. And if we go up into the 180, then we have 180 from high to low. We have a 45 from this high to low. A lot of things can line up here. So I mean, all this can go down this week. And this is March 12th, which is just tomorrow. As far as price goes, we're not quite in any kind of major price area, but 145 is the 50% level right there. And above 90 degrees down would be right around 150.
Interesting
Um,
thing is the yen has been really strong while the
mhm.
the market, the risk markets have been weak. So there must be some sort of carry trade unwind that's tied to this, you know?
Yeah, do you think this really clean trend has anything, trends have something to do with that? That sort of unwinding, a
It,
little bit
it,
every day kind of a
it
thing, or
it looks like it's pretty sharp.
yeah, yeah,
Pretty
yeah.
sharp move.
Hmm.
Because the last time we had it was into that August low last year when
Here,
yeah,
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 exactly. And that was a nice clean 180 move.
yeah, that was a big move.
So now the other thing to notice, now you guys saw all the things that are happening this week, all the timing for the yen. And if you guys, if you take it from the high that we just had this year, we came down 90. So we kind of satisfied it. As far as the move goes, like meaning we could have a little bit of a correction.
Hmm.
So watch this 187, 188 area because I'm sorry, not one,
147.
147,
Right.
148 area because this is going to be really the balance point only because of all the 90s and all the
Hmm.
cycles. So if just to make it easy, you don't have to track a whole bunch of things. So watch. let's say 147.50. You want to be above that. Okay.
Hmm.
If we can hold above that, then we can expect the bounce maybe to test the 50% area, 153.5 or so. And if we slip here, then we're going to go visit the old lows, 142. And why am I talking about that? Well, because look, coming off the last swing high, we're right in the middle now. Again, you were talking, we're joking about that. What was it? Last price right at look where it's trading right now,
Yeah,
147.84.
I know, right
Exactly on
there.
the arrow,
Hmm.
you can't make this stuff up.
Hmm.
So, and that's why I have to say that if you use that, then you have to bracket it. We have a 90 degrees on the square, 45 on each side. We're right in the middle, and this will dictate sort of the next movement only because
Ab-
it's 90. Okay.
Absolutely. Yep.
All right. So that's the yen trade's kind of easy one if you take
Hmm.
it, take it like that. Did I miss anything? Anything else you want to cover, or we're
No,
good?
I think that's good.
We're good, right? And if
Yeah.
you guys have any questions or you want us to cover anything else, I know you guys wanted us to cover silver and a couple and I think couple of the European indices. I think I'll add those for next time.
Tied you
And
over till the weekend.
yeah, just a couple of days, no problem. So, and here's a coming off that big square, right, square of the low. You can see how that really worked out nicely.
That was
And the
perfect.
bigger picture, the reason we're looking for counter trends is because these big monthly, weekly cycles just don't end after, a few days down.
No,
So,
no, no, no.
so this is not sort of a V bottom. So I think we really want to watch the next few, not the next few. We want to watch the next counter trend, see how it works out.
Exactly.
And Friday we'll look at where we end up with the final low here this week.
Hmm.
And but the thing is, a lot of things point at us already having it in place. So
Hmm.
I think it's a good day to do the review.
Sure.
All right, let me put it to you, and we'll take a look at the NASDAQ, that rascal.
Okay.
All right,
Yeah, it was leading on the way up, and it certainly led on the way down.
well, look at that.
Hmm.
Perfect.
Look at where it found the low today.
So even the NASDAQ is exactly on one of these key
Yeah,
square levels.
it's
Mhm.
again, it's you look at for the evidence mounting up to say, okay, do we have a good low or not? We don't know for sure. There's no certainty in the markets. So what we're looking at is, what are the numbers telling us? Well, we've been tracking this thing with, level to level, and every time we've lost a level, we've gone down to the next level, and this one was no different. 2 days in a row now, we found our bottom right here on this half square. It's 50% of the square. So if tomorrow we can get another bar above it, that would be a good sign. And let's see, how we act on the counter trends. The first level to watch is 19,925. How do we navigate that? And you can see the overhead that's going to run into here, the highs and lows from previous, June, July, August, October area. And if we can manage to get above and sit on top of that, then we have this one to deal with, 20,642. And you can see on the way down what happened there, right? There was 3, 4 days where it was trying, couldn't make it, and then gave it up.
Mm.
So we're in watch the counter trend mode. Why are we in watch the counter trend mode? Well, we have a high, we have a low, we have a lower high, and now we have a lower low. So and if this would rally back up into here and fail, that would be a gift. It
Yep.
really would. It would be a gift to sell, right? Because you
Yeah.
go to the half square, you got structural resistance there, you got all this overhead. So that's what we're watching on these counter trends. Not saying for sure they're going to fail, but we know the bias now based upon the cycles and based upon the price action. So we want to watch those levels carefully, watch the bars. Do we do a couple days and then down again, or do we do inside days and then down again? Those are all things that show inherent weakness in the trend. But we know the levels to focus on now. If we take out this 19,197, call it 19,200, that means we got further to go. Then we're going to be down here,
Right.
around 18,4, 18,5. And it could cause a panic and all that Barrie was talking about, because it just will show another support level not holding. sort of relentless selling going through there.
Mm-hmm.
So that's the daily. Let's take a look at the weekly. Important thing here is we failed at this key level, this 21,000 level that we've been talking about. Right? Last week we had the high of the bar was right there, and then this week we just gave it up. So right now, bigger picture, like Barry said, when you look at weekly, monthly, we're just kind of getting started.
Mm-hmm.
So, do we get an inside week or one or two week counter trend that then rolls over? That would be, again, it would be a really nice setup. Because 18,186 is where we're heading if we can't, if we can't get above this 50% of the square at 21,000. So that, and again, we don't have to repeat this because if you watch the videos, a lot of cycles came in here weekly, big weekly cycles. Let's look at the monthly.
Mm-hmm.
Same story on the monthly, right?
Yeah.
Failed at the 50% of the square at 21,100, and the monthly target is low 18s, 18,200.
Right.
Do we get some back and forth and chop around? Possibly. But we know the path of least resistance for now is lower. I wanted to show you this calendar day one. This is a really good look at what happened, and we'll look at the support there.
Mm-hmm.
So we came up. This is the 360, this line here. This was why this was really important. This was 360 degrees in price from the October 22 lows, right? That's a
Wow. Look at
full
that.
circle, right?
Mm-hmm.
Came up, battled here, battled, pushed up, tried for a couple days, and then just gave it up. And it went straight down to the full square. So the low is good, right? It's low as the
Mm-hmm.
low is on support, just like we saw in the trading day chart. The low is on support. We want to see what happens with the counter trend. 20,600 is 50% of the square. So a rally back up, if we can get there, would be, a good setup if it fails for a sell. And if we lose this 19,000 area, we're heading down here, 17,000 area.
Mm-hmm.
But it's all there. It's just know the levels and watch how price acts. Know we're on support at the lows here. So as Barry said with ES, if we take out these lows, today or yesterday's lows in the NQs and can hold under this 19,200 level, there's more downside opened up, and we got to watch it. Anything you want to add here on the Qs?
No, we're good. It's all on the charts.
Yeah, I mean it's nice when you have the levels because then you know where to look and what's the key prices to see how the price action unfolds around those spots. And
Mm-hmm.
that's what dictates the odds for you. If it stays on top, odds are favor it's going to go up. If it gets stuck under, odds favor it's going to go down. And you can make it as mechanical as that. It doesn't have to be, super complicated. A lot of volatility, a lot of action, but the squares are immutable, right? They're there, and their
Mm-hmm.
prices are set. So when we have those good numbers, it gives you, sort of an anchor within that chart to focus on to help you assess odds. But I think that's all I wanted to cover. The commodities we'll pick up in the weekend show. We were seeing some strength in some of the grains on the weekdays. The softs have been kind of mixed. The metals have been decent. So we'll take a look on the weekend and see if anything's setting up that has a good risk reward. But listen, we appreciate the support. We hope you
Mm-hmm.
enjoy these quick midweek ones. We're just trying to highlight based on the recent action, the important levels to watch, and we think we gave those to you in the show. So if you like it on YouTube, ring the bell, set the alerts, send the link around, and help us grow the channel. We appreciate that. And we'll talk to you in a couple days on the weekend show. Good job, Barry. We'll talk to you on the weekend.
Thanks, Ben. Good job. We'll see you soon.
All right. Take
Mhm.
care.
Bye.
Bye-bye.
Take care.